Yo, what's good, fam? Hope everybody's had an outstanding weekend and is having a great Sunday or Monday, depending on where you're at when you're watching this. Shout out to y'all, man. It's it's getting spicy out there, very spicy. Um, you know, people are really catching on in general. It's getting kind of crazy. Cause I'm sure you guys see exactly what I'm seeing now. Cause it's really all out in the open nowadays. Uh, I don't gotta say much no more. So we're gonna go over some news first and some weekend news, and then we're gonna cover some charts, and we'll even take a look at crypto, see what the four kings are doing. It's getting crazy out there, though. Boy, oh boy. I mean, people are really getting mad. People are fully aware of all the money that these migrants are getting or these invaders are getting. They fully understand what's going on. No problem. Fully aware. It's crazy. I'm seeing videos from Joe Schmoes. Not no, social media personalities. We're talking about regular people are laying this information out there. I mean, years late, but better late than never, right? All right, let me share the screen and let's get into these select news items. I was running through Zero Hedge yesterday, just seeing what was going on, and man, it's just crazy. It's just crazy. I thought I was sharing my screen already. I'll skip the part. Hold on, guys. Give me a second. All right. So what we're looking at is my feed on feedly.com. I don't know if you guys are familiar with this website. I found it. I don't know how, like over 10 years ago. Um, Long story short, it lets you aggregate news sources from wherever on the web, and put them in, whatever organized way you want. That's when I used to read about crypto shit. Way back in the day, as I said. Um, so yeah, this is a pretty cool site. Check it out if you've never been there. This is not a sponsored thing. It's just what I use. Been using it forever, and it works. So, anyways, let's start over here at the bottom. Target CEO says retailers can't price gouge in competitive industry. Well, as you guys are probably fully aware, these Democrats keep lying about how economics work and are now out here promoting and preaching the worst thing that can be promoted and preached. Um, if you're not aware of how price controls work, let me explain. It's very simple. Put yourself in the producer's shoes. Put yourself in the merchant's shoes. Put yourself in the business owner's shoes. You are not going to produce something that's not going to make you a profit. Literally, that simple. And if price controls are instituted, then that's exactly what is going to happen. So that is going to create shortages in all types of goods and services, period. Which is going to only lead to a further increase in prices. So that's how that's going to play out. Straightforward. Now, anybody that's taking a simple economics class can explain that if they were paying attention, because it's just simple supply and demand. If you are killing the supply, then by default, the demand is going to shoot up. I actually wrote a piece on supply and demand in my Substack. Go check it out. There's tons of great information on there for those of you that want to learn about basic economics. This stuff is not hard. You just really need to know the basic definitions, and you can piece everything else together because you experience it firsthand. Once I realized that, I realized, well, hell, I know exactly how the system works because I participate in it, and it's exactly that simple. So all you really have to do is learn the basic definitions, learn the basic concepts, and everything else is really teaching yourself, because the real world is economics. Everything you see when you step outside is driven by people's incentive. That person that's selling those baked goods on the corner or tacos or whatever, peanuts, gyros, hot dogs, bagels, baked goods, whatever. It doesn't matter. Smoothies. They're selling it because they can make a profit on it. The average person isn't going to think of doing something like that, but it makes money. So clearly, that's why people still do it. Right? Yeah, this is a good I remember that. I remember this a long time ago. That was a hot topic. Uh I don't know if you guys remember, but probably like 10, 15 years ago when this thing first dropped, it was crazy. It was insane. I don't even think about I think I had kids. Yeah, I think I had kids, but I think it was before I had them specifically. Because I don't remember really having them. And I remember being with someone that did have kids, and the youngest kid, they were driving him up the wall about this ammo thing. So, and it was not cheap. I don't remember what the price was, but I think it ended up going like 250, 350 for some crazy like that. It was something crazy. So yeah, tenfold. It could have been that. It was insane. So it's really that simple, guys. When there's a lot of demand for something that there's a limited quantity of, by default, prices are going to shoot up. Simple supply demand. So let's just read through this real quick. VP Harris recently proposed the first ever federal price gouging ban, whatever that means, on the food and grocery industries, which are the slimmest margin industries in the realm of business. As everybody knows, that's not even like a secret. Everybody knows this. So they just looking real stupid. Harrison and other White House officials have claimed that businesses are taking advantage of the economic climate and overcharging customers by sharply raising prices to pad their profits. Cornell, who is the CEO of Target, Brian Cornell, dismissed these assertions, telling CNBC's Squawk Box that Target is in a penny business, as we all know. It's a very competitive space, he said, explaining that the industry faces small profit margins. And, that's just the way that industry is structured. If you ever worked in the retail industry, you probably understand this. You probably have seen this firsthand. Um, it's a nickel and dime business. At most, they might make 10% margins because they gotta sell everything at a markup after it's marked up, after being shipped all from wherever the hell it came. So it's just not an easy feat. Talk is cheap, and it helps to know how things work. But these people are just trying to get people riled up and mad. That's all they're trying to do. Check this out. Woman arrested for silently praying outside abortion clinic wins 17,000 from police. I don't know if you guys remember this. This was big news back during the Rona era. Uh, what was this? Was this in Oh, it was in England. Look at that. It was in England. I didn't remember that. But there you go. $17,000 from the police in Birmingham, England. And if you guys know what's going on in England right now, y'all know this is serious business. Because all the Brits are getting shitted on in England right now. It is not a secret. It's crazy. And you know what? I understand what's happened. And simple fact of the matter is you're not fixing anything by repeating the cycle or continuing the cycle of destruction. Simple as that. Please note the scrolling ticket at the bottom of the screen. All the risk you take on is yours and yours only. Because we just having a nice chat here. So this is crazy. And it's like I told you guys during that whole period of time, 2021, 2022, all the stuff they're doing, they can't do it. If you let them get away with it, then yeah, they can do it. But if you fight, they lose. Simple as that. Now, this was interesting. In June, the UK received a gold shipment worth $150 million from guess who? Argentina. Most likely, the gold was sent by the Central Bank of Argentina to be used as collateral in the London bullion market. Oh, what a convenient theory. I don't know how much you guys know about the city of London, but the city of London is not London. So this gold did not go to London. And shout out to everybody in the chat. Digging the energy. Thank you guys for coming through on a Sunday. And if you ask me, in my opinion, well, you know what? Let's keep reading. Let's keep reading because it's kind of good for you guys to have a little context to the story. Let's keep digging. Newspaper El País, which is an Argentinian paper, reported on July 28th, 2024, that the official gold reserves of Argentina were transferred abroad. That part of the official gold reserves of Argentina were transferred abroad. After rumors spread regarding the whereabouts of the Argentinian gold, Ministry of Economy Luis Caputo acknowledged that the gold was indeed shipped overseas. If you have the gold outside the country, you can get returns. And essentially what that means is that they are engaging in probably 3%, 1 to 3% of their book and just swap trading so they could just earn some yield on it. That's the narrative that they're trying to lay down, which is innocent enough. It's innocent enough. But if you ask me, this seems like a fee from Argentina to the rulers. That's what it seems like to me. But who's counting? Hungary may send migrants to Brussels to avenge asylum fine. Look, I just think this is hilarious. Several years ago, Texas had a brilliant idea. Take the millions of illegal immigrants that were flooding its territory. They sent them all out to the sanctuary cities, as we all know. And we all had a good laugh about it. Especially when those in Martha's Vineyard kicked out all the migrants that ended up there. Because, what damn sense does that make? How are you going to shove people in some other community and then be mad when they do the same thing to you? Hilarious. Anyway, turns out Texas' idea was so good, it's now being adopted in Hungary. Now, uh, Hungary has suggested that it might, like Texas, start transporting migrants who show up at its border straight to Brussels, unless it can resolve a dispute with the European Union on penalties for its asylum policies. Check this out. The European Court of Justice has slapped a 200 million euro, which is 223 USD million, penalty on Hungary, plus an extra $1 million daily fine on the country for Prime Minister Viktor Orban's non compliance with the court's earlier judgment on the protection of asylum seekers. Now, you guys got to understand this court is a kangaroo court. It's bootleg. It's not a real court. It has no actual authority over any of the states in that region. Period. Doesn't matter what the fuck you call it. European Union, Europe, fucking Eastern Europe, fucking Russia, whatever. It doesn't matter. This is a bootleg court. Very simple. So this guy is just saying you guys are clowns, and we're gonna just send these freaking losers your way if you think we're gonna pay that. That's long story short here. It's just crazy that these people think they could do that. Very funny. Top 10 countries by gold reserves in 2024. And who's adding the most? Let's see. The country with the most gold apparently is the United States, which nobody has been able to verify, so I'm not sure where they got this idea from, with 8,133 tons, which has only a value of 579 billion. Now, it might sound like a lot to you, but you guys gotta understand that's not a lot given the size of the US economy. And that's why that number is shit. If that number was bigger, maybe 3 to 4 times bigger, that's 2.4 trillion, right? The US economy's GDP is like 8 times that still. Think about that. Seriously, think about that. And on top of that, please realize that this is unverified. But this is what the rumored valuation and number of gold is. Germany comes in second with 3,351 tons. Italy, 2,000, almost 500. Same thing with France. Russia, 2,300. China, 2,260. Switzerland, 1,000, which is kind of weird. Is that right? I feel like that's not right. Am I wrong? SUI? That gotta be Switzerland. Right? Let's see. Switzerland, yeah. What the hell? Only 1,000? That's a lie. So they're not even counting everything. Japan. They must be counting just what these central banks have. And not what's actually in the country. Because that don't add up at all. However, sounds good. Netherlands, 600 tons. India, 800 tons. India. Yeah, they just talking about the central bank. We know India got way more gold than that. All right, let's see what else we got here. This graphic is showing the 10-year gold reserve change in tons. So which countries have been accumulating the most gold over the past 10 years? Russia's leading, 1,300 tons. China's in second with 1,200. Turkey's in third, way behind at 425. Poland, India, 250. Uzbekistan, Kazakhstan, interesting. Now this country is an interesting one. Very interesting one. 150 a pop. Singapore, Iraq. That's funny. I could do a whole stream on that. 100 a pop. Thailand, 100. So let's see what we got here. Yeah, we already saw that. All right, so that's what's going on with these central banks and who's actually got some of a, I don't know, monetary economy. Saudi courts oversee surge in executions for drug offenses. This is a U.S. ally, folks. And we're talking about all drugs or whatever they consider drug from marijuana and up. And we all know marijuana isn't even a drug. So this is what a U.S. ally is doing. Human rights overseer of the court, UN human rights delegate, like they're like the main country in charge of human rights right now. Things to be aware of. B-2 stealth bomber hot pits at Indian Ocean Air Base, positioned within striking distance of Iran. And in line with that, gold is it gapped up. It closed the weekend, or for the weekend, at 743, and it opened 75.10. So that is a 17-cent, 27-cent gap. That's pretty significant. So odds are this is probably going to carry itself out. Momentum was already bullish. Volatility is already, as we talked about last time, uh, subdued. Right, it's exhaustive. And typically when that happens, as you guys saw last time, early June, we get a nice little bull move. Question is, how high will this one go? It could go here, it could only go here, it could go all the way up here, it could just keep going. We don't know. So we'll see what happens. We shall see what happens. Let's keep checking the news. Now, this is really all you gotta see. This is just what they're doing, man. They're really playing hot fire. Supposedly, Iran is hitting Israel, but I'm not sure how true that is. Um, Not sure how true that is. Because, their goal is to stoke anger, emotional response from the populace. That's really all it is. Sorry about that, guys. Sorry about that. Sorry about that. Um, Damn, what was the last thing you guys heard me say? So I just read this headline: more than 165,000 pounds of Purdue chicken recalled for metal contamination. Um, I hope You guys are buying like real food. People with questions about the recall, call 1-866-866-3703. I know Purdue is a very popular company. I figured I'd share the info just in case you guys hadn't heard about it. Let me see. I'm trying to figure out where this might be. The products being recalled are 22 ounce Purdue, Simply Smart Organics breaded chicken breast nuggets, 29 ounce Purdue chicken breast tenders, and 22 ounce Butcher Box Organics chicken breast nuggets. All three poultry products have a best if used by date of March 23rd, 2025, indicated on the back of the package. So if you're in the Purdue, because they're pretty popular, I remember the funny commercials back in the day. Do what you got to do. Money market funds continue to surge. It saw significant inflows for the third straight week, pushing total assets under management to a new record high of 6.24 trillion, despite the rebound in stocks. Now, typically, these two are inversely correlated. Money market funds are typically where people store cash when they sell stocks. Ah, when the map was shown. Okay, so what I was saying about the whole Iran Israel situation and the U.S. parking that stealth bomber there is that could supposedly Iran is attacking Israel somewhere. I can't remember where. So take it with a grain of salt. I haven't confirmed anything, but supposedly that's what's happening. And my thinking is maybe that bomber being parked there could have been what provoked that, because them people are tired of getting fucked with, you know. So I don't really know, because at the same time, you know, it's all about causing conflict. So maybe that's the move because that's the reason. We'll see. But yeah, back to this. Typically, when margin debt goes up, or excuse me, not margin debt, money market funds go up in terms of the assets under management, how much money is sitting in there. Um, the market's going down because people are selling stocks, you know. So, and interestingly enough, people aren't understanding. Finally, U.S. equity market capitalization rebounded strongly this week, despite negligible change in bank reserves held at the Fed. So a lot of people haven't identified the fact that this is happening via the M2 function and not necessarily the balances that are being held at the Federal Reserve, or not with the balances that are being held at the Federal Reserve. And there's really not much of a distinction there, unfortunately. And that's kind of the crazy thing about it. Uh, but, you know, people make up whatever wild assumptions they want. So, money market funds is basically where cash goes to earn yield. You know, so typically the idea is that when that number goes up, is because people are getting out of the stock market, and when that number goes down, is because people are going into the stock market. But if it's going up with the market going up, then are people parking cash and selling stocks, and you don't know who's selling stocks? Because that's cash going up, right? So that's something to think about. That's one angle. And it went up, looks like half a trillion. Oh no, 24.9 billion. Okay, in a week. But at one point, it went up 50 billion in a week. So, but the market shot up here when there was an increase in 50 billion in money market funds, that market kind of went sideways, but it eventually went up. So, it's because MI went up, then it went sideways, went down, essentially washed that up move out. Then another bunch came in, and then it went higher. So that's that. Just atypical and interesting to point out, or interesting to note. 10 years after Prop 47, California goes full circle and starts fighting retail crime. Yeah, that's what's going on there. Rand Paul asks why TSA is using terror watch lists to spy on Americans based on their political views. This is real, folks. This is happening. Understand. It's not a joke. Sorry about that. American Power Grid adds most generating capacity in 21 years as AI data center demand surges. And guess who's paying for it? Yo ass. Because it ain't going to be them. You know how that goes, homie. Just like you pay for the stadiums and everything else, even though it's actually free. But, anyways, end of hoaxes. Trump, RFK Jr., and the Democrats. Lurking terror, or the Democrats is lurking terror. Um, I don't know why the hell this is even here. I don't think I even read this. Let's just not we'll waste our time with that. A flawed idea. Joe Kernan destroys Elizabeth Warren on live TV over price gouging policy. Generally, I think this guy's a moron, but I think he just doesn't like her because he's typically siding with the crazies. So let's just check it out.
Look at the Washington Post, and if you lose the Washington Post as a Democrat, you got some serious problems. This is what they said about. What? How do we know that it was way, way above just passing along costs? Look at what happened to their profit margins. If they'd just been passing along costs, margins would have stayed about the same. But for look at the Washington Post, and if you lose the Washington Post as a Democrat, you got some serious problems. This is what they said about the price gouging or the price control legislation. It was really pilloried from both sides of the aisle. Even Jason Furman. I don't know if you saw some of his comments. He said it's not good policy, and it could actually do more harm than good. And I can paint you a picture of how that would work and how it's worked in the past, where we've tried to artificially hold prices down. Competition doesn't come in. People don't, like, if beef is too high, people don't move the chicken. The competitors don't come in to undercut where the beef prices are. Nothing works when you try to artificially control prices. It's just a supply and demand issue. It's a flawed idea. So did you have a question here? Yes. Why would you propose a flawed idea when the real problem? So let me ask you, if you really want to help the middle class, if you really sincerely want to help people having trouble at the grocery store, it's not price gouging that's the issue. And if you look at it seriously and really want to help them, then let's do something about it together. Fine. I understand if you want to do a lecture about this, but let's just start with, where have you been for the last 30 years as 36 states have price gouging laws, and they have used them effectively. States like Texas and Florida, they've used price gouging laws. Price gouging laws are not price control. Price gouging laws are to say, sometimes markets go off the rails. And when they do, we need some ways to get them back on the rails. We need some curbs on that behavior. So, for example, we watched in the pandemic how prices went up for a whole lot of reasons. They went up partly because we had supply chain kinks, we had problems because of the war in Ukraine that cut supplies of certain commodities. And one of the things that happened as a result of that is there were corporations that said, whoa, now that we have inflation, now that prices are up overall, this is a great opportunity for us to raise prices, not just in passing along costs, but to go way, way, way above that. And how do we know that it was way, way above just passing along costs? Look at what happened to their profit margins. If they'd just been passing along costs, profit margins would have stayed around 5%.
So what actually happened in 2020? Well, let's not forget, they are the ones that shut everything down. So the reason that everything went haywire is because of their initial policy error, which they then had to backtrack on. So let's not forget that. Now let's continue to laugh at the clowns as they continue to speak.
But for some industries, some companies, profit margins shot up. And do you know where they shot up most often? It was in companies or in industries where there was a lot of concentration, a lot of market power, places where the market is not functioning competitively. So you end up with you remember we all talked about egg prices. You end up with something like this giant egg producer, Cow Maine. And Cow Maine raises the price of eggs. Their profit margins increased by 718%. That's not just passing along costs. And that is a time that's sophistry. Your example on craft. Your example on craft is even worse. You finished first. In any of the states around the country that already have price gouging laws. Can I tell you why those are fallacious and misleading at best? And your craft analogy is even, why can't I tell you? Please let me tell you. Craft, you say, was 440% profit increase. The example you used, the prior quarter from the year before, they had a charge of $1.3 billion, an accounting change which wiped out profits. Then they earned what they normally get. Let me finish now. They earned. You didn't let me finish. Look at the data. Come on. We have economic study now after economic study. This is the way it always goes. When there is more concentration, 40 million eggs were destroyed because of avian flu. When there is more concentration in an industry, we have seen much greater increases. Do you attribute the inflation? That's what you think we need to do to solve it? They're not random. They are not random one-offs.
She's right. They are not random one-offs. They literally caused it. And that's important to remember.
It is part of the problem when you've got companies that are gouging consumers on prices. Consumers need to know they've got somebody on their side.
Senator, listen, we're trying to help. We're trying to actually do.
36, where are you in the 36, 37 states that currently have price
just
gouging
quickly on that
laws?
point, Senator Warren.
This
is killing here. We're never going to be able to work. This is the way you never lose an argument because no one can ever say anything back to you, Senator.
The state price gouging laws.
Clown's gonna clown, folks, and that's what you get. So, let's see what else we got here. Should be a nice laugh.
And that is a time in any
your example on craft.
in any. Can I finish? You finished first. Any of the states around you in the 30 state price gouging laws take.
Yeah, it's just the end of that other clip. So all good. Let me see.
Look at the Washington Post.
Yeah, no, that's just so. Yeah, so as you guys can see, that's pretty much how they operate. And you know, it's a shame that the CNBC folk, bless their hearts, didn't point out the obvious, which was the fact that they started it all. So, but hey, maybe one day somebody will point out the obvious. We'll see. Where were we? Study exposes the myth of Federal Reserve independence. I thought this was interesting because it came from a somewhat liberal university here in New York City, at Pace University, Lubin's School of Business, stating that this is nothing but a myth, which is obvious, right? We already know why. But I think that this, if I remember correctly, this guy's final analysis is a little off. Regrettably, the best interests of the government and business sectors take precedent over the concerns of the household. And yes, that's the way it looks like on the surface. But it's a little bit more than that. And that's kind of what's important to understand, because now the Fed is doing more than monetary policy. When you look at what the Fed, what is the Federal Reserve's mandate? Let's get rid of, and let's ask Chat GPT. Let's see. Let's see what Chat GPT gives us. Interesting. Interesting. Because when you hear them talking about what their mandates are, it's not just a dual mandate. No. Now they include all types of shit. They include climate risk and diversity, equity, and inclusion now. They've magically added non economic mandates to their mandates and have completely resorted to ignoring their actual motherfucking mandates. This is why, precisely why, they are, let's see, this is precisely why the Fed is, yeah, 6 cuts behind the curve. I mean, imagine failing 6 tests in a row. That's basically what's going on here. At every time that they've had a meeting and they didn't cut, they fucked up. That's what this chart is telling us. Because you guys got to remember, the key here is zero, right? And let me actually add a horizontal line here that's like infinite at zero. Because I don't know why, I just never thought of doing that. I don't know. I'm just slow like that sometimes. I'm not afraid to admit it because nobody's perfect. All right. So now we have zero. Let's see what it looks like when we zoom out. right? Zooming out, man, we're deep in the game, right? And this is what's important to understand. We go out to 55 days per candle, you know, we're talking that from March 22, which over 2 years ago at this point, right? 2 years and 5 months, almost 2.5 years ago, 2 years, 5 months ago for sure. And in 30 days, it's going to be two and a half. The Fed has been ignoring the market and its warnings. That's essentially what that means. And in the same vein, while they've been doing that, what's been happening? Well, inflation has been running amok. Now, yes, it had a lot to do with all that money printing, of course. But the Fed essentially exacerbated the issue by not doing what needed to be done to cool off certain areas of the market that was screaming, hey, there's a problem here. I mean, imagine rents being equivalent countrywide when a rent, of the economy in Utah in a fucking desolate area is not the same as the economy in New York. I don't care if we're talking about the hoodest area in the Bronx. Like, it's just not the same. There's more money moving over here. So how can the rents be even close? But that's what's happening in the world. So it's things like that that you could definitely attribute to, let's see here. I've heard you can look up mm, what the fuck are these things called? PCE? Yeah, that's what this shit is. Let's go with this. So as you guys can see, this number just keeps going up, right? No matter what happens, people are spending more. Personal consumption expenditures. That's what this line is signifying. And when you're getting a reading on inflation, it's tied to this. But that's called CPI, Consumer Price Index. Now let's see what that looks like here in simple terms. All items in U.S. city. See, but this is they report the one that they want you to think is not happening, which is the one that is all items, consumer price index for all urban consumers, all items less food and energy in U.S. city. I mean, imagine that. How fucked is that? I mean, it makes literally zero sense. Let's see if we can change this to rate of change. Mm, nah. I don't think I can do that here. Yeah, no, even if I do this, yeah, it's just gonna give me that. Let's index this to 100 and see what happens. Just down here. So, okay, from 1988 to today, this metric, which is the consumer price index for all urban consumers, less food and energy in U.S. cities, the average, it has still gone up 2.5 times since 1988. So the cost of living has gone up only 2.5 times, excluding the main staples, which is ridiculous, right? So let's go to all of them. And let's see how bad that damage actually is. And understand that this is underreported, right? Look, it's still about the same. So that's how bad they're lying. Because we all know inflation is way more than some measly 2.5% in the last 40 years. There ain't no damn way. So if spending is actually contracting because inflation, meaning people can't buy as much anymore, why wouldn't you do the quote unquote right thing to help the economy, right? Because that's not the actual goal. Never is. And it's hard for people to realize that, for a long time, I used to think that these people were incompetent. But no, I was the one being incompetent, believing that they were incompetent. Of course, they're not incompetent. They know exactly what the fuck they're doing. They know exactly what they're doing. Interesting to note that the long term picture for crude is bearish as hell. This is crazy to me. I had no idea. Let's look at this 5 week or 5 day. From a 5 day perspective, crude is, I think, finding a bottom here that it's going to trade off of, which we've kind of seen once we look at the daily. Uh, you zoom out a little bit, and you see the relevant support areas. And I recently just wrote a piece on support and resistance on my Substack. Definitely check that out because it's very good basic instruction on how easy it is to identify support and resistance. And as we can see here, the volume profile, which is highlighted over here on the right, this is where I have it set up on the right side of the chart. You have the value area high marked in this pink and value area low marked in this pink. And the point of control, i.e., where the most trading activity has happened in this much of the chart that you see on the graph. If I zoom out a little bit more, this is going to change a little bit more. See? It's going to change a whole lot more. And that's a function of all of the data points that the indicator is picking up. So as you guys can see, it even changed again because now I gave it more space because I got rid of the panes below, those lower panic, these indicators down here. I got rid of them and it changed the graphic and how it looked a little bit more. So as you guys can see, the value area low, I'm not sure if you guys are familiar with volume profile, market profile, but long story short, this is essentially an area of support where if the market happens to find itself, buyers should at some point step in to some degree. And it took the market a couple dollars to find a bid, 1.5, and went from 73 to about 750, 71.50. So that's $1.50 below this slated area of support, right? But when you look left, what you end up seeing is that the main point of control down here ended up being this area 71.60, 71.65. And this is why a lot of people are huge fans of market profile because market profile, a lot of the time, does a lot of work of finding the important levels for you. If you were an astute trader, understanding how markets trade, and you zoom out and you taking a longer term trade, et cetera, and you're trying to set it up and find the least risk entry and all that good stuff, you're looking for a trade here, not even here, because there's way more activity down here than there is up here, right? You just got these bars right here, where this line got all these bars plus all these bars back here. This one is just this because there was a shift here, you see? So I can't really trust this line because it's not as strong as this one. And that's how I look at it, at least from this perspective, because we're talking about a daily chart. Every day is a bar, right? So that's a lot of time. That's 24 hours. It's not a little bit, not at all. So you got to respect that. You can't dismiss a pattern on a daily chart. You just cannot. And if you look at what we got, for all we know, because on a 55-day chart, it doesn't look like it looks on a daily. This looks bearish, and even the indicators are bearish. Delta is just, but you guys got to remember, how do markets work? They're like waves, right? And ripples. So if we're looking at something on a 55 day, once we go down to a daily, it's not going to be the same point of view, right? So how do we know that the market isn't just flagging? Right now, there's no evidence that that's the case. There's no evidence that is setting. What you do see though is waning momentum, right? Like you see the indicators is getting weaker over time because now we're looking at a 5 day per candle chart, right? And this downward sloping price action on the momentum is not what you want to see, right? When the market is bullish, we'll take a look at what momentum looks like. You guys can see it's just up, like it's just up here. So this is weak. It's looking weak, and it's trying to get up. So if volume, cumulative delta doesn't really pick it up like it has before, right? All these periods of time, we could see some happen in crude. That's unexpected because even I don't expect it to roll over. I'm bullish. I expect price to go up, but market don't give a damn what you think. So you got to really be cognizant of the big picture and all the pictures and understand what game you're playing, right? Because you cannot move the market by yourself. So that's critical to understand. All right. So this area is clearly a nice area of support. We were able to find the precise entry, least risk, and all of the good stuff, on this trade. So this is why this one, going all the way a couple of weeks back when we talked about it, or a couple of days back when we talked about it, I was a fan. Right. We talked about that, and here we are. Uh, shoot, $4 later. Right. And if we look at, let me see, is this? Yeah, let's take a look here. If we look at the levels from, well, if you go back to the 21st, 23rd, oh, damn it, this chart doesn't, there we go. Um, we can see we had an extreme close. And typically when that happens, what that means, first of all, an extreme close means that it closed at the third level or lower, um, from the settlement area, which is what this line is. And that's what the market did. And typically, when the market does that, it reverses. And if it closes at a level lower than the third, which is like the fourth level typically, that means the trend is going to continue. So if there's a sell off, like you see here, you got 1, 2, 3, 4. What happened? The next day, the market continued going lower, even though it was an extreme move. It was so extreme that the market was like, we're going to just continue to fall. So that's exactly what happened, but only for 2 further levels the next day, right? And then you got some chop. The market tried to pick itself up, but it was just really flagging lower because you had a final move down to the 71.46 area. And we just identified what it cleared out. So it's a pretty safe area to lay risk capital on because, what are the odds that it's going to keep going if that is what it is, right? And given that it was identified 71.46, I mean, damn, that shit was spot on. It's fucking crazy. But that's the math, and that's how it works, all right? And the next day, what happened? The market opened, and pretty much people just bought till everybody else came in and kept buying. and we're just up from the 71.90 area, 71.93 after hitting that nice wall at 71.50. So the question is, do we stop? Do we continue? And it looks like, let me check my sheet here. Looks like we actually closed above the freaking fifth level that I did not lay out here for crude on Friday, or fourth level. Let's see here. What is 7507? Um, uh, oh no. Uh, yeah, so this thing is gonna keep ripping basically, because this is the fourth level. They closed right at it apparently on Friday. Um, and the market just seems like it's hitting its stride because it's got all the reasons to. You got nice moving average crosses here. Let's get rid of some of this stuff here. You got a nice moving average cross. This is a 144, 233, and this is a 34 period EMAs, all of them. So right now the market is claiming a bullish trend, and when we don't overlap the labels, you'll see that the shorter moving average, the 34 period, is now overlapping the 233rd period. So once we clear that 144, that's pretty much all she wrote. And well, we should be probably up here by then. Should probably be in a nice little resistance area, and then we'll see what the market's really going to do. Because as you guys can see, we have a nice little gap right here, right, and an even bigger one here. But if the market is going to take care of that selling imbalance, then it's definitely going to trade up. And we just don't know how high up it's going to trade. But right now, it's clearly clearing out some areas. And that's all she wrote for crude. It's definitely bullish though. 78 spot 36. And yeah, when you look up here, you even got some resistance here nearby. 78.28, 78.40. So, we got 74.18 or 78.18 to 78.40. That's the resistance area that's coming up. So we'll see how that goes. The market's gonna definitely continue to trade higher though. That's what's going on there. I mean, especially with all the geopolitical risk, it's just no way it doesn't continue to do that. Cotton. So you guys know I've been watching this ever since it topped out here, and I think we finally hit. We're finally gonna hit. This thing is finally gonna take off. This is theoretically, assuming it does what I expected to do, the first domino to fall. And what we're gonna presume here is that this is a actual bottom. Right. We have a very long base. All right, we went sideways, man, since 2022, November 2022. Finally fell out of that base, damn near hit this support area, 65.57. And for all we know, the market got tired of waiting for it to get there. And what we're seeing right now with the divergence in cumulative delta, which is the volume, the net volume that's entering the market. There's a negative divergence there, or positive divergence, excuse me, there. You have positive divergence in momentum as well. Eventually, it's going to cross zero and it's going to take off. And you also see positive divergence after the market essentially finding trend exhaustion and doing the do, right? Every time it would bounce lower, the volatility would get weaker. That's what you're seeing here. This was like an enter signal basically, and every time it troughed and it troughed higher, right? That was pretty much the market saying, all right, man, get ready, get ready, get ready. And as you guys see here, market just set itself off and boom, that's all she wrote. And it hit that area where volatility hit the wall and lit up the market. It came back and retested that area. Things to think about as you learn these games. So, anyways, in my opinion, I think cotton is finally finding its floor. And as we look at this chart down here, we even have a fair value gap, which essentially means that price action is such that we are indeed in a bullish momentum scenario, especially if we break this resistance area. Come tap here, wash back for a little bit. Ultimately, we want to fall back here to 67.81, which is part of the area where I would be looking to enter. 67.81, 67.92 down to 50. So we got a nice little area to check. And zooming in, let's see what happens if we zoom in here. Hmm, what did I say? I think it was 67, 67.81, 90, 67.90 to 67.50. Let's see if we can find that. 67.90 to 50. Oh, here it is. 90 to 50. Nice little gap. So if the market does retrace back down here, which it should at some point in the near future, we even have slightly potential negative divergence setting up. But again, when markets are bullish, that'll happen and it'll just end up being an accumulation area. So it's important to always watch what the market is actually doing, how it's actually trading, and if it's actually breaking certain areas of support and resistance, which is also known as market structure, right? It's like you standing up. You can't be standing up and being on your knees. You know what I'm saying? Like that's physically impossible. So, that's why when markets break certain levels, like if this level breaks, that's bearish. That level breaks, bearish. Breaks, bearish. This breaks, even more bearish. That breaks, bearish. If this breaks, forget about it, right? We're going to definitely see new lows. And in reality, the market has a long way to go. It really does. So it'll be interesting to see if the market even comes back here because it's so depressed. It's been selling off for so long. It could easily not even find its way back. So we'll see what it does. Still have these moving averages to contend with. Ultimately, if to see the move I expect. And yeah, let's find some other market to look at. Let's just take a look at gold just to get that out of the way. I mean, if you guys don't know what's going on right now with gold, I mean that thing is just gone. All right, it's uh, it's gone. Question is, when is it going to stop going up? Um, when it topped out in 2011, it was because of an erratic price move. And essentially, what that means is that the market went up too far too fast. This market has been consolidating for like 3 years. Since 2020, it's been consolidating. And it's just breaking out in December 2023. So we're not even a year into this move. And it's important to grasp the severity of this reality, right? The monetary base in the U.S. is continually expanding, and we covered this in one of the previous streams. So be sure to check out the older ones. Probably a couple days, 2 to 3 streams ago for sure. It wasn't that long ago, where I threw the monetary base M2 on a gold chart, and we compared it. Let's do it again. Oh, is it that one? Nah, let's do it this one. We can do both, but no. Let's make this a line. Bam, let's get rid of these indicators. And these percentages aren't even that far off. But as you guys can see, the lines are, see here. Um, Let me put these in opposing. Actually, no, I'm doing this wrong. Let me make my life easier for a second and just change this one. Bam. Skip. Make this regular, regular, regular. Bam. So no matter which money to, no matter which money stock value you look at, two money stock or the Federal Reserve's count, whatever. Hold on, guys. All right. Anyways, as this continues to go up, actually, let's make sure these are all logarithmic. You know. Oh boy. All right. Let me yeah. Oh, is this? All right. I don't know what the hell happened to that, but let's put this back in line. Yeah. All right. So that's accurate. Just like the t-shirt rate. This has to be linear. Well, this has to be logarithmic because this is the price of gold, and this is the monetary base, which is just a standard thing. It's not like the price of gold. It doesn't drive. It's not a driver, or excuse me, it's an input. Price of gold is an output. So that's why it has to be logarithmic. So yeah, it's just not looking good. However you slice it at either rate. So whatever. This is what's going on with gold, and that's important to understand. Let me get rid of this here. Why didn't this disappear? I'm not sure what's up with this. I'll figure that out later. So yeah, gold is just it's going, guys. It's going. Forget about it. Let's take a look at the dollar. So you guys know the Fed essentially let everybody know on Friday what's coming. Rate cuts. They've been dodging it for so long that they just got to do it now, and they're letting the market know, yeah, y'all right, whatever, blah blah blah. So now the market is anticipating rate cuts. Yields are lower. The dollar is lower because people are going to switch out um, from a decreasing yielding currency into a higher yielding currency potentially, or maybe into risky endeavors or whatever, private equity, private credit. Who knows? We'll see. But that's what's happened. When we look at a daily chart, we'll see what happened here. The market said we're gonna just wipe off a percent, which is a lot in the currency market. It's not like a stock market where a percent is like whatever. In the currency market, 1% is a huge move. Not even playing. Anything over half a percent is huge because these markets just don't move like that typically. And when they do, you gotta take advantage of it because that's good money. But as we can see here, this is essentially not impacting the equity markets. If anything, it's supporting the equity markets. And this is what the objective of the money stock increasing is all about. And this has been a major economic tactic that the political powers have been using, well, political and corporate powers have been using since the 80s. And it's important people understand that because that's what credit expansion is about: credit cards, credit usage, 30-year mortgages, and stuff like that. Like, it's crazy. You lock yourself into these financial contracts that you don't even understand, and you get stuck with all these problems, later on down the line. You don't want to deal with, but there you are dealing with it. All right, so here we go. Looking at the E-mini 500 right now, it's looking relatively bearish. We got all these different color lines. What do they mean? Well, the different color lines signify different areas of support and resistance for different time frames. Different color, different time frame, different meaning for the line. So the daily lines are yellow, which you can see. The 233-minute lines are light blue, but you can see one up here. You guys see that's where this is coming from. That's what it touches. The purple lines is the 55-minute line, and you got a couple here on the chart. And then the last one is the light brown, which is for this time frame, the 13-minute. And it looks like we already opened and hit it and bounced off of it for a cool 7 points. Nice. Or actually 9 points. Not bad. Not bad. 9 to 8 points on a single 13-minute candle isn't too bad. But then we hit value area high. Sellers came in, sold that bad boy down right through this 13-minute area of support and resistance. So you got to understand what the market is showing you and when it is showing it to you. So while it worked one time, the market came back and said, all right, it's just a 13-minute level. Don't take it too serious. And whop, cleaned right through. So now the market is looking a little bearish. And if we zoom in on NASDAQ, let's see, I don't got all these lines on the NASDAQ, but same setup though, market looks a little bearish, but it could just rebound because it typically, that's like, as I explained earlier, when the market is in a bull trend, it just finds way to keep going up, finds ways to keep going up. And if the dollar is getting dumped, well, where people putting their money at? There's very few places. Bonds is one of them, clearly. When we look at the daily, what do we see? Well, we see a continued trend higher. And the market has probably been expecting this since May. Because what happened in May? Well, things started breaking in obvious ways and inflation became a pretty significant topic. So the market even put more pressure on, right? And when we go look at the Fed funds 2-year, what happened in May? It topped out, started compressing, and went from close to zero, which it doesn't look like it because it's an logarithmic. Hold on. It went from close to zero at 40, 30 bips all the way down. So at one point, we were as good as being behind one cut, so you knew they weren't going to care. And then it all came burning down. And this is why we find ourselves in this stark economic reality. Let's see what nat gas is doing. Nat gas a little bit, but it kind of got down, so it's probably going to keep going down. All the currencies that are opposite the dollar are just up. They're just trading up. Not much to write home to on that one. It's just they ripping. Dollar dumping, everything else is pumping. People are like, we out. You don't want to play. Give us no yield. We gone. Look at the yen. The yen is ripping. It's been ripping like crazy. This is a great trade so far. New Zealand dollar also same deal. The 400 pips is huge for that currency. Not even at 400 pips yet. It's crazy. Swiss franc keeps ripping, and as I've explained many times before, when this currency is trending up, that's a sign of a weak U.S. economy. And what do we have in May? Well, it bottomed in May, and here we are, all the way up here, 1,000 pips later. That's just freaking 4 months, and it ran up 1,000 pips. You couldn't even get 400 full pips out of New Zealand currency. So this is how significant of a move it is in general. Very important to understand it's a serious business when the Swiss franc is ripping like that in terms of the economy. Uh, yeah, it's the number of T shares divided by the hex payout. Just go to the site. It's literally right there. They even give you the formula. It's not like it's a secret. It's right there. Um, Chinese stocks. What are they doing? They're finding a rebound. They came back, find an area of support, which, as I explained earlier, is typically what happens when markets take off. And now, long-term investors can comfortably actually get long Chinese stocks because now they should find their official bullish footing and just keep ripping higher. Let's take a look at 13-day candles. Look at this. Look at this. How it's setting up. Right. It's perfect setup. You have the trend exhaustion, volatility right here with the positive divergence and momentum, right? As price closes lower or at the same price, positive divergence and cumulative delta. So this is a bam, bam, thank you, ma'am. There's not much to think about. Get in with your eyes closed and ride it till the wheels fall off because it's going to run for a minute. Because that's just how these markets set up. So that's Chinese stocks. Let's look at bonds. I think we already looked at bonds. Yeah, we did look at bonds. Volatility. Let's check out volatility. And as you guys know, I like to look at volatility with the ticks ranges. Right now, just on a daily basis, this is what it looks like. It doesn't really look like much to me when I look at it like this. It's just, wax on, wax off. Because that's what it is. When you look at this chart, it's just a mean reverting thing, and you don't really know when it's going to go up and when it's going to go down. A lot of times it just trends a lot because it's trending. A lot of times it's just doing some other shit. It's just hard to say. That's why it's important to just look at it so that when when you're standing right now, it looks like we're about to enter a low volatility regime, meaning the market should just continue pressing on higher, risk on. That's what that means. So if this keeps trending lower, because that's what we're seeing, since Monday, August 5th, it's just been doop, 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 doop down, right? But if this is really the end of this move, as we've tapped 100 a couple of times, meaning trend exhaustion signals are hitting, um, is this going to stop here at some point? Like, are we finding a bottom, right? Because that's the risk here. If this decides to actually do what, find an area of support and trend higher, like that's not good for the market. That's going to crush the market because higher volatility, and it doesn't look like that's the case because momentum is so weak here on an up move. But that doesn't mean that we can't be getting a positive divergence setup for a rip like this, right? From the 20th of August at 8 a.m. through 22nd. So 2 whole days until 2 p.m. The market just was volatile. And let's see what the stock market did during that time from the 20th to the 22nd. Let's see. 20th to the 22nd. Here we go. You know what? Let me go to a little lower scaling here. Oh, crap. I forgot. I'm just going to slide this over so we can get a good look. And we talked about this too one of the days that I streamed, because I remember drawing these little arrows talking about volatility exhaustion and whatnot, and how we probably were seeing the top and all that. Remember that, guys? And yeah, it came, and it came with some fury. So from the 20th, right, to the 22nd at 4 p.m., bam, like that's markets, guys and gals. That's markets. Um, that's a nice 2% move. It's actually more because I'm not covering the top of the range from 2025. And we covered that resistance area and everything too. So it's things like that, guys. We got a million ways to slice this cake, right? And that's important to understand. That's how we get good at these markets, finding all these different ways to confirm what we think is true or not. And right now, it looks like NQs, as we talked about a few minutes ago, is bullish, right? So the market is trending up. Commodities, though, let's look at these puppies, and then we'll wrap it up. We're already hitting an hour and a half. It's been a pretty good stream so far. We covered some good information. Let me know if you guys got some questions that I can answer before we wrap it up. Yeah. So Coco still doing this thing. Let's put the VWAP on here. See what the look at that. And look at that. So we got a couple confirmations of bullish price structure, meaning like this should continue. And then once we look, and this is just physically on the chart, just visually on the chart, excuse me. We're looking at 2 years right now. This is 2023, the start. This is the start of 2024. And this is where we are. And typically, when things jump down like that, they're going to freaking pop up. That's typically what that means. That doesn't mean that they're going to roll over. So you got price hitting on VWAP, which is this pink line here, several times. Several times. Right? And what you don't know is if it was up here at the time and all that, like, because this line changes with time because price changes, with time. So you got the moving averages, the long-term moving averages adding to the support picture, and then you have all these fair value gaps also, which are a function of price activity acting as support functions. And then on top of that, you have the price distribution, the market profile, highlighting the fact that the market is bullish as well still, with these buying imbalances that are just not getting cleared out below, right? And this is what you see. I'm gonna get rid of the candles now. I want you guys to understand something really quick. We're gonna now also get rid of the VWAP and the moving average. Um, Excuse me. All right. When you see price trading above these orange bands that are like, they look like, I don't know how to describe them, but you guys can see them. These guys are defining value area low and value area highs as price changes. So typically signify tight ranges, and typically when markets consolidate for long periods of time, they explode in one direction or another. So this is why we're seeing this conical shape on this graph for such a big move in this market, right? Because the market eventually was consolidating for so long that all it could do was just take off because there must be a supply imbalance in the market, which is only going to continuously cause prices to go higher because value is down here, but the market just can't trade down here. It just, for the life of it, cannot. It hasn't seen these levels since October 2023, almost a year ago. So the point I'm trying to impart is just to understand how to look at the big picture. So when there is an opportunity to enter a trade at a moment such as now, when it's all the way up here, you understand what you need to look for, right? And here's support and resistance right here, right? If we want to throw it on here, let's do it. Let's do it. Support and resistance right quick. All right. 65.90. Okay. Top of this candle is 66.48. Bottom of this candle is 65.94. Good enough. It's touching both, no problem. And that's the idea. You want it to be an area where you see that price is potentially going to react, right? And up here isn't too bad, but it's just 400 points above, so it's not as great as here where there's obvious interaction with the market. So this is why those areas are weaker relative to this area, which is stronger. And then plus, when you look at the profile, what do you have? Well, right at 64.47 or 64.50 around there, you have a high node volume area, which means there's a lot of interest. There was a lot of buying interest at this area. So you got to kind of be cautious if the market does happen to turn around quickly there. Now let's zoom in a little bit on this cocoa just to see what it actually did right there. Need I say more? I mean, look at this. It literally just hit that support level and bounced. I mean, and look at this cumulative delta. I mean, it's all the way up here relative to where the low is. I mean, this is crazy. It's even positive. Or no, it's a little bit negative, but 10 times less negative than it was at its previous low. So this is just a crazy, crazy move. And I think this is a contract switch. Yep. That's what that is. Let's see. And the sad thing is that we can't look back. Let me see something. That's whack. Let's see. Yeah. Bam. There we go. So the market just kind of stuttered right there because of the contract change and it just kept shooting on higher. And here we are. Right. It looks like the market is potentially setting up a negative divergence, but typically when the market rolls up like that, the momentum anyway, that implies it's going to keep going. But yeah, we shall see. It's been a winning market so far in a lot of ways for a lot of people. For those who know how to play the big ranges and whatnot. Let's check out. Fuck cattle, man. Like we know that. When I look at these charts, I get mad because prices are high. That's feeder cattle futures. This is lean hog futures. And we're looking at approximately 2.5 years of data for each. Let me clear this out. And I just want to look at it plainly, just plainly. Look at the distribution. It's a lot of price action. This is a huge range. We're talking from 65 all the way up to 120. So that's 100% range. That's a lot of price risk. And a multivariate direction. Like there's no trend at all here with these contract switches. So let's see what it looks like just in a regular contract. It's just it's funny because prices were going down until July, and now they've been going up ever since somebody announced they were running for president. Isn't that funny? What was that, August 1st? I guess the market predicted it before then. Because here come the price controls. Coffee. I don't drink it, but it's in the bull market, baby. So looking at the 8-day, looks like it might be consolidating up around here. So it's important to watch what it's doing. We'll keep an eye on this, see what it's going to do. Live cattle futures, another one. Prices are just up there. Where's the activity at? Up in the stratosphere. OJ, that thing just doesn't stop, man. Just doesn't stop. You gotta see it. It's just beast mode. Sugar looks like it's finding some type of respite. It looks like it's building this wedge. It's down this descending wedge, and typically what happens at the end of this descending wedge is that if it doesn't fall out the chute and it rips up and finds a support on the opposite side of the top, which was resistance, it just rips for a nice while. And it's a great strategy to trade if you can find it. Very hard to find. This strategy does not present itself often, but it's one of the most profitable strategies out there because of how explosive it is. You're talking about a market going potentially from all the way down here, 18 cents or whatnot, 19 cents, all the way up 10 cents higher, if not more, depending on how big the move ends up being, right? Because this can consolidate around here for a long time. There's a lot of reasons for it too, just based on the distribution we're seeing so far and the support that we're able to see in the chart going back to 2021. So we'll keep an eye on this because it's getting interesting right now. Corn, yeah, it's just dumping. All this stuff is just dumping. I mean, if you can get in there and just sell that bad boy off a moving average, man, you're gonna make fucking cake because this is a basic trade. This is not doing anything fancy. And sadly, if you're trying to pick the bottom, it's gonna destroy you because you got to understand what the market structure is. And clearly it's downward. Like there is no reason to be trying to buy anything. And that's hard to see sometimes when you think you see a bottom and the market just plays tricks on you when you don't understand what you're fully doing yet. And I've been there, and that's exactly why I'm making that comment because for a long time, I was the guy buying those dips when clearly, when you zoom the hell out, there's no way in the hell the market's going up, right? But when you're trading in a microscopic time frame and you don't have anything identifying market structure for you, these trades happen and you think you're doing something, but then you waiting for it to pay off by breaking this, and it ain't never gonna happen. And this is where a lot of people go, Ari, they don't use stops or whatever, and in certain areas, in certain instances, and then they lose it. All the profit that they gained buying down here, for example, all the way up here, that's 10, that's almost 10 points. That's $500 on a corn contract, which is huge because it's hard to make that money long nowadays in corn, but it's very easy to make it when you're short. So, and we saw why, right? That's what matters, guys. It's the big trend, big trend. Soybeans looks like it's bouncing for now. Could be finding a low down here. Let's see. Or it could just be given the speed of the recovery of this volatility. It could just be setting itself up for a recoil lower to just tag this support area that should become resistance, which kind of looks like it already has here, right? And as you guys see, fair value gap, but we'll see. The market is kind of rolling up. That's soybean meal futures or oil, excuse me. That was soybean oil. This is soybean meal, and this one is just dumping like corn. And I think all soybean products are just dumping right now. Soybean at one point was 1,500, $15 a bushel, which is what it means when it's 13.60. That means $13.60. So right now it's $9.63 a bushel. And as you guys can see, it's been a straight shot down. Like peace. It's crazy. Fortunately, I missed it, so and I just never got in it. Wheat. I don't really like trading wheat because it's crazy, but as you guys can see, this is what wheat does. It just screws people, because a lot of people just don't look at multiple time frames, and that's why they missed, the obvious bearishness of this move up here. Like it was just a setup, right? But if you're not looking at all the time frames, you're not going to see how these moving averages are there to block it and how momentum really isn't bullish yet. I mean, look at the structures down here. We got a long way to go for wheat. So that's what's going on with the markets, guys. At least the centralized markets. Let's see what's going on with the homies. Next screener. See if this thing even works. Alrighty. Damn, Potion ain't even in the top 10 fucking volume. Y'all niggas is slacking. Woo! Yeah, slacking like a motherfucker. What happened to all the builders and all that bullshit? Ah, fucking homos. All right. Unfortunately, there we go. Let's see what PLSX is doing. Damn it. I need to sell more. That's what you guys need to do. Sell more. And I really stopped looking at it because these charts, man, they just take forever to load. And I know it ain't me. So it's very disincentivizing for me to come and go to use these websites. I have standards, folks. I have standards. All right, maybe today we'll see the price. Damn, I really wanted it to be the USD price, so that'd be yeah, okay. I think that's what we got. Oh my god. There we go. Yeah. Saw about through moving averages on here. Good. Yeah, I keep selling it, god damn it. Yeah, I keep selling it. Damn it. It's actually looking bullish. I don't like that. I don't like that shit at all. Feel like dude in belly. Mad right now. I need to sell that shit. Stop playing games. Sell that. I would love to see a move to 1600, 1650, 1500. I would love that. That would be amazing. So I'm gonna leave that up to the crowd to handle that. Make our dreams come true in the community. Thank you. For those that actually understand what's going on, everybody doesn't understand what's going on. So man, this shit is trash. Come on. All right. Jesus. Let's I regret coming and look at this damn site. My God, is there nowhere else to go look at this shit nowadays? Good stuff, man. Appreciate you checking out the videos. Um, they're really just me talking to myself mostly, and hoping you guys just learn, uh, pick up the information as what the fuck did I do? What was Come on, man. All right. All right, a buck 86 at 50,000 PLS per. Let's see what that chart is looking like. Maybe at some point we'll get to look at it. But yeah, man, appreciate you checking it out. Hope you're learning from it. I would love a move back to 65 cents. Seriously, just to really set it up for a good bullish move, that would be outstanding. It's nice to see though that we traded all the way up to $11. I didn't know. I really don't watch it. I just reset and all that. I don't really pay that much attention to it. All right, let's see what else we got going on. Hex, ooh, below half a cent. Not even gonna look at the chart. Y'all just keep selling that bad boy. Thank you. All right, let's see if we can find PLS in here somewhere. Feel like they just got rid of that chart or something. I don't know why I can never find the damn thing. Come on, man. You are kidding me. PLS. Next time I'm just what? Next time I'm just going to the. Oh my God! I'm just going to the site. I'm never using this again. And now doesn't anyone want to show me the price? Okay, what's the more that I go in there? All right, well, let's go to pulsex.com. Go to trade app, blah, 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 blah. Oh my God, I had to click a couple times. It's the end of the world. It's the end of the world. It's the end of the world. All right. PLS USDC, let's see what it looks like. What is the value for one PLS per USDC? Amazing. Four zeros and a 3 6. Oof. Yes, keep selling it, folks. Yes, keep selling it, folks. That was a 1 month chart. Now we're going to check out a 1 year chart. Oh, it looks even better. Yes. Yes. 1.9. Oh, that's a PLX. All right. So there you go, folks. There you have it. We're looking good. We're looking good because, you know, everybody doesn't have real crypto. Everybody does not have real crypto. And given the economic difficulties that are going to present themselves here soon, um, yeah, it's going to be pretty important to understand the decisions you're making here moving forward because it's just going to matter, man. Think about what happens if they really cut off certain meats, chicken, whatever, fish, poultry, fucking beef, whatever it is you like. Just imagine, what if? Because as you guys can see, there's no hold bar, man. There's really none. And that implies that you got to understand that and how that plays into market dynamics if you're playing markets and all of that good stuff. I mean, look. If we really are going to see these people impose price controls, man, all you got to do is buy commodities. You don't have to do nothing else. You're about to become a billionaire just going long fucking future commodities. That's it. Go look at the 70s. You're welcome. Peace.